So welcome to this Obelisk support webinar, which gives you an introduction to the financial implications of working as a freelance legal professional. This is one of the key aspects to look at carefully when making the move from an employed lawyer to being a freelance consultant or interim lawyer, as it's sometimes called. And it's important that you've considered this thoroughly to find out if it's the right choice for you and your career. I'm Lucinda Acland, Learning and Development Partner at Obelisk Support, the UK's leading flexible legal services provider. And today I'm joined by Molly O'Donnell, Chartered Advisor at Fortress Wealth Partnership, who works with lawyers who are thinking of or who have moved into a consultancy role. Molly's going to give us a broad overview of the financial implications of making such a move and the main points to think about. I'm also joined behind the scenes by Laura Vosper, Obelisk's Head of Talent, who can help if there are any questions specifically about Obelisk support. As this is a webinar format, you will be muted as a participant. So if you've got any questions, please do put them in the Q&A and I'll check those as we go along. And we'll also have a session at the end. So Molly, can I hand over to you and perhaps you could tell us more about your role and job and particular interests in the area of legal consultants?
Yes, of course. Thank you. What a great introduction. So I work as a financial advisor, so helping my clients to make the most of their money and get what's really important to them financially. The reason that I'm doing this webinar today is that I have a real interest in financial well-being. So alongside my day job, helping my clients, I like to do informative webinars, helping people to understand the world of finances. It's such a jargon-heavy industry and it's quite easy to get lost in, but it's something that's so important for everyone's day-to-day life. We don't help ourselves by calling ourselves wealth managers, but I really believe that financial advice should be accessible to everyone and that it would benefit everyone who comes across these kinds of webinars. So that's the background behind wanting to get involved with Obelisk and the well-being journey in general. But more specifically, as Lucinda mentioned, I work with a lot of solicitors as clients, and I've done a lot of research into solicitors moving to consultancy-based roles. From surveys that I've done, it's very much a topic that's on the agenda. I'm seeing many more people moving now into those kinds of roles within the legal profession for a number of reasons in my experience. So sometimes financially, because people think they can earn more by going in the consultancy route, which is definitely true in some roles, but also for flexibility and independence. So having more control over your own time. And I found that particularly with mothers returning to work, being able to shuffle work around school runs and obligations in that area really gives people freedom. So having done quite a lot of research in this area, I was really intrigued to get involved with Obelisk and offer as much support as I can in this area. I also studied law myself at university. So while I don't profess to have any experience working in that area, I do understand quite a lot from work experience and workshops about how people are paid and the financial situation when it comes to the legal profession. So what I wanted to do today is really to give an overview of things to consider when you're moving to a consultancy-based role. It's going to be a very generic presentation. I think the most common answer you'll get from financial advisors when you ask them a question is, it depends. It depends on your particular circumstance, but that is very much the case. So today is more about general pointers, giving you an overview of things to consider. And then, of course, if people would like to delve into it deeper, then we can do that afterwards. I also wanted to make it very clear that although I do this and this is my role and I can help people in this area, there's lots of other resources. So there are, of course, other advisors. There's lots of resource online. So this will be generic so that you can take away the points, hopefully, to wherever you would like to. So I think if I start sharing my screen, I've put together a little bit of a presentation, but it will mainly be talking alongside it. So Lucinda, can you see that on your screen? Perfect. So as Lucinda said, I'm a chartered advisor at Fortress Wealth Partnership. I work under the St. James's Place umbrella. Let's see, there we go. On the agenda today, and happy to take questions as we go. It's not a strict agenda, but just in terms of what I thought, and in line with Lucinda, we've both thought would be useful, is to cover the differences in freelance and employed roles, differences in the payment structure, and areas to consider depending on which route you're going down or are currently on, pension planning, and protecting yourself financially. So I wanted to start with the very basics, in my opinion, of financial planning. So people often jump into things like investing, pension planning, but it's very important to have a solid foundation. I do tend to use this slide at the start of all of my wellbeing sessions because it applies to everyone, but there are certain aspects to consider when moving to a consultancy or self-employed role. The very basics, in my opinion, is building up an emergency fund. So as the name suggests, it's for emergencies, but it can cover things like the car breaking down, boiler, unexpected expenditure. But for today's session, I feel it's really important in terms of being out of work, whether by choice or not out of choice, to have that emergency fund there. That gives you the support and the buffer, which means that if you don't have income coming in at a certain period, you've got the money there to give you flexibility. So it's really a really important first step in financial planning. We recommend that this is 6 months expenditure as an absolute minimum. If you've got children, mortgage, higher financial obligations, then in my opinion, I'd be looking closer to 9 or 12 months just for security. Saving as you go for tax, I will come on to that in more detail later on, but it's really important to work out which way you're being taxed, and if it's not coming out of your salary or being deducted automatically, what that looks like. Also to review your direct debits. So when it comes to budgeting and saving, it may sound very straightforward, but going through your direct debits and seeing what's coming out of your account each month is really important to make sure that you know what your expenditure is. And the way that I tend to do this is by grossing it up, so timesing it by 12 and working out what that is over the course of the year. If you don't think that that's worth the money when you look at it as an annual figure, it might be time for it to go. And that's really important when putting in place a budget. So a lot of what we're going to talk about today is how to work out your expenditure and expenses and working forward and seeing what that looks like for you as a consultant. So working out what your direct debits are, what your expenditure is each month is really important when you put in place a budget. Without knowing what you are currently spending, it's really difficult to forecast what you're going to need going forward. I do always say to people as well, make this budget realistic. So if you like going for dinner with friends once, twice a week, include that, because otherwise, if it's not realistic, you're unlikely to stick to it, in my experience. And once you've looked at that, so once you've done the analysis on your current expenditure, pay yourself first. And what I mean by that is that if you've earmarked that you can save 200, 500, £1,000 a month, move that out of your account as soon as you get paid. Otherwise, we tend to find that when it's in your account, people find things to spend the money on. So if it's there, people are likely to spend it. So it's good practice to move it out of your account as soon as you can. So a very generic starting point, but I just think it's important to set the foundations, because any plans that you put in place need to be secure by having things like an emergency fund and a budget in place. And I think we may have said at the start, but if anyone has got any questions, Lucinda will monitor the chat and we can do them as we go or at the end. So employed or freelance then? There are differences between the two roles, and I'm not going to go into detail on how to decide whether you're employed or freelance. Hopefully you'll know how you're being paid, but it's really important to understand how you're being paid and which category you fit into. The main aspect, in my opinion, is being taxed. So if you've come from a law firm or any employed role, generally you would have been paid via PAYE. So each payday, you'll have had a pay slip with your salary, your pension will be deducted, any benefits, national insurance and tax will be deducted automatically without you really having to consider it. This generally isn't the case when you're freelance. Lucinda's going to talk a little bit about IR35 in a second, but the reason that it's important if you're freelance is that you have to deduct that tax yourself, and we will come on to how to look at that in more detail. Lucinda, did you want to jump in there and talk a little bit around the IR35 aspect?
Just really briefly, because some people may have come across this and not really know what it means. But essentially, with the introduction of the HMRC regulations known as IR35 in 2021, many roles require consultants to work through the entity of an umbrella company to administer the tax deductions as you worked. Now, whether the IR35 scheme applies depends on the particular client organisational role requirements. And so what happens is that our client team are given the information about the job, what's called a status determination statement, SDS, to determine whether the role is to be considered inside or outside the IR35 regulation. So that's something that comes from the client, depending on the role, and our client team are then told at Obelisk. If the role is inside IR35, the consultant will have to contract for their services via an umbrella company, and Obelisk only ever uses accredited umbrella companies. If the role is outside IR35, consultants have the option to either contract via their own personal services company or an umbrella company. So that's that in a nutshell. I'm not going to go into any greater detail, but certainly Obelisk can give you more information. You can contact us to talk about that further.
Perfect, thank you. So based on that, it should be hopefully quite straightforward to find out how you're paid for each role, but it is really important to work out what that looks like so you're aware of how that works. Just generally around being employed versus freelance, so you will likely have more control over your working hours and your work in general, which means that you can control how you spend your time. There's no employee benefits generally, and that is very much a generalization. As always, it's important to check, but from experience, we've seen if you're not employed, there's no employee benefits coming in. So things like life cover, pension, sick pay, and we'll build on that on one of the later slides. And you're likely to have more independence when freelance. So there are definitely benefits to each side of things. It's just important to know exactly where you are so that you can plan accordingly. So how are you paid then? So if you're, and again, this will depend whether it falls within IR35 or not, but if you're paid without the tax being deducted, you'll be paid gross. You therefore need to consider how much you want to earn or how much you need to earn over the course of year to stay in line with your financial obligations. So that's why we discussed on the first slide things like budgeting and making sure you know what your expenditure is, so you know that you need to meet that level.
Molly, we've got a question here. Rosalind is asking, where would you recommend putting your emergency fund? Obviously not perhaps in your current account, she says, so it doesn't get spent, but needs to be any access. Do you have any tips for that?
Good question. Interest rates at the moment on cash are very low, as I'm sure we're all aware. It needs really to be in an accessible cash account. So it needs to be somewhere that, as the name suggests, you can access in an emergency. Further to that, all we really recommend is having it in a separate account that isn't linked to your current. I completely agree, if it's in the current account, you're likely to spend it, but just in a separate account. So that can be just the best interest rate you can find at the moment. Martin Lewis, money saving expert, is normally the best person to look at where the best rates are, but there isn't really much you can do with an emergency fund because you don't know when you're going to need it. So in terms of investing and trying to get a better rate, it's quite difficult because you don't know when you're going to need it and when you need access to it. So my recommendation would be just to have it in a separate account to your day-to-day expenditure, but somewhere accessible, and the best interest rate you can find, which is quite tricky at the moment, unfortunately, but very good question. So when you've worked out how much you need to earn in line with your financial obligations, it's really important to make sure that you include tax in that. So if you're being paid and tax hasn't been deducted automatically, it's really important to take your tax off that, in my experience. So what we have seen in the past is people essentially pocketing their pay, spending it on their financial obligations, then realizing they need to pay the tax, and the tax bill comes around in January, or a payment account in July, and the money isn't there because it's been spent. And that's something we do see quite often when people have been being paid on an employed role. So when that's automatically been deducted from their pay slip, the money that's gone into the bank account is spending money, we see that people forget to factor in their tax. So it's really, really important to make sure that you're deducting your tax if it hasn't been deducted at source. And as Lucinda said, Obelisk can help with whether it has been or not, because that should be quite clear cut. So if it hasn't, my main recommendation is to save as you go. Otherwise, you can get yourself into trouble when that tax bill comes round. I can expect I might have a question on where to put the tax money. Again, same thing applies. So you're going to need the tax money in January or July, so it gives you slightly more flexibility. I personally, and this isn't necessarily a recommendation as such, but I personally hold mine in premium bonds because I can access it within 5 working days when I need it, but it's secure and in a separate account. But again, it doesn't really matter where you hold it as long as it's accessible when you need it. And I'd recommend not taking any risk with that money because you know it's going to go towards the tax bill. There are also lots of cash flow modeling tools that can be used to model expenditure and outgoings. So that's something that we do for our clients, but I'm sure other providers will do as well. And I'm sure there's tools that you can use online. What I mean by the cash flow modeling tool is essentially looking at what's coming in versus what's going out and what that can mean in terms of savings. And I'll show you an example in a second. It's also important to allocate funds for employee benefits. So as I mentioned at the very start, you won't likely have things like life insurance, income protection, critical illness, which I'll delve into in a second. So if there's aspects that you want to put in place, then it's important to factor those into your expenditure, and also pensions included in that as well. So pensions likely won't be set up. Again, it will depend on the umbrella company and how you're being set up. But if pension isn't included, then it's important to allocate funds for that as well when working out your expenditure. And again, emergency fund. So very unlikely to be being paid holidays or sick pay. So it's important to make sure that you've set funds aside for that. I think we all know that after a holiday, you feel refreshed and you're ready to go back into the day job and really put your all into it. So give yourself that flexibility, give yourself that holiday pay as if you were employed, and also sick pay. We can't control when we're going to be unwell. And the last thing that you want is financial worries at that time when all you need to do is focus on getting better so you can go back to work. So make sure that you factored that in, what you'd like that to look like, and work out a round number for that and add that to your emergency fund. So cash flow modeling then, this is an example. It's actually just one that we made up because we wanted to include everything in it. But what this shows here is blue being income. So from, it is a salaried role in this case, but it doesn't really matter. So income from salary, essentially, some rental income, just because we wanted to include everything in it. And what you can see here is the black line is expenditure. This cash flow model therefore shows that at age 65 or 60, sorry, in this case, they're retiring, the client is retiring. They're then going to dip into orange, which is pensions, savings and investments later in their retirement, which is the turquoise, state pension. They have a final salary pension in this model, as I said, just to include everything, and rental income. It then shows that at age 85, there's going to be a shortfall, which is red. So they're essentially not going to have enough to meet their income. The reason that I'm highlighting this is because this is the level of depth that you can go into in terms of working out what you need to save. So for this client, we would be saying, okay, well, actually, you're earning good money here. You've got a lot of surplus income. If you put that aside into something like a pension or an investment or any kind of savings vehicle, you may be able to get rid of this red at the end. So it just shows the power of forward planning. And from the surveys that I've done with people in the legal profession, I understand how demanding these legal roles can be, which doesn't leave much time for planning outside. I've seen a lot of people, they just want to switch off when they get home. The last thing they want to do is be worrying about finance and life admin. But it does show that actually, if you don't bury your head in the sand with it, you can make essentially good progress so that you know the financial side of your life is on track. You can focus on the day job with peace of mind that you don't need to worry about finance. So it just gives you an example of the kinds of planning that can be done, but it's more to highlight that it's important to start thinking about it so that you don't leave it too late. So what about pension then? If you were employed, you would have had an auto-enrollment scheme. So what that essentially is, as I'm sure most people would have experienced, is you'll pay into the pension, your employer will also pay into the pension, and that's deducted from your payslip automatically. So really, you don't have to worry that much about pension being set up for you because it's happening automatically. If you're freelance though, you're unlikely to have a pension scheme in place automatically. So it's really important, if you haven't already fully funded your pension, to allocate funds towards pension saving. And the cash flow model that we did before goes through how to, will give you an idea of how much to save, and that's a whole different conversation and probably not for today. But the point on this slide is really to make sure you're allocating funds towards that pension. If you are set up as a limited company or a sole trader, there's different allowances in place and different ways that you can pay into a pension. Again, I'm not going to go into the specifics today because it's a whole different topic in itself, but it's important to work out how you are set up, and because that does impact on the allowances that you can pay in. Common question that I get asked is, do your old workplace scheme continue? So the answer is yes and no, but yes, essentially they do continue, as in there won't be contributions going in unless you've chosen for them to, so they'll likely stop in terms of contributions. But if they were invested before, they'll still sit there and keep growing in the background, but there just won't be any new activity in terms of contributions. It's really important to have a look at where these pensions are, make sure that they're doing the best that they can for you, and to review them. We see an awful lot of people who have lost track of pensions. I'll come on to a crazy figure about that in a second, but essentially this is money that you've worked very hard to save up. I'm sure you felt the pinch when it was coming out of your payslip, so don't lose track of this money that you've already worked hard to save. And doing a review of those is a really good starting point when it comes to financial planning. We can help with that, as can other advisors, or you can do it yourself and look at that. But the main thing is to know where they are first, and also to work out if they're doing the best that they can for you. And then how do you work out how much you need to save each month to hit your retirement goal? This is a very personal question. It's hard to do it on a generic basis, but to give you an example of some of the numbers, we worked on a 5% drawdown rate. Drawdown just essentially being the amount that you take out the pension. So we, as a very basic figure, and it's used quite often across the financial services industry, if you're taking 5% out of the pension, it's then growing at 5%. Essentially, it shouldn't run out because it's growing at 5%, you're taking 5% out, meaning that the underlying pot is keeping its value. To get an income of £25,000 in retirement, you're looking at a pension pot of £500,000. So very rough maths there, but it does hopefully highlight the kinds of calculations that can be done. It doesn't have to be a, how long is a piece of string? What can I contribute each month? It can have more of a structure to it. And that then helps when you're working out forward planning in terms of what you need to save, right back to how much you need to earn to meet your financial obligations. So very whistle-stop tour of pensions. I'm probably one of the only people who loves pensions, and I could talk about them all day, but just wanted to highlight the kinds of things that you should be thinking about, in my opinion, when moving to a non-employed role. I'm going to skip over this slide because it's a lot of maths and it was what I just went through, so I won't baffle people at lunchtime today. But what does this figure represent? So I probably gave it away in my previous slide, but there's £19.4 billion worth of lost pensions in the UK. So these are pensions that have been unclaimed. People have moved jobs, have moved house, they've lost track of them. That was a stat from the Association of British Insurers, and that was in 2021, so I'm sure it would have gone up by then. But really just highlights how important it is to keep track of those pensions. Don't let one of those pensions be yours when you've worked hard to save it. And final thing on the pension is tapered annual allowance. So in the UK, you have an allowance that you can put into your pension. It's the lower amount of £40,000 or your salary. So what I mean by that is if you're earning over £40,000, so let's say 60 for easy maths, you can put 40,000 into your pension each tax year. If you're earning below £40,000, it's limited to your salary. So if you were earning 25,000, you can only put in 25, not the full 40. It does start to become tapered when you earn over a certain amount. So current figures on that are £240,000. So once you're earning over £240,000, that tapered annual allowance is reduced by £1 for every £2 down to £4,000. The reason that I'm highlighting that is I know in the legal profession, people earn good money. And if you're earning over £312,000, you can only put in £4,000 a year to your pension. We see a lot of people being caught out by this, and the tax charges can be quite hefty if you're over contributing. We see it a lot if people haven't opted out of workplace schemes, for example, and the percentages are automatically going in. But it's very important to be aware of what you're earning compared to what can go into the pension. I'm absolutely not saying don't pay into a pension because you don't know what the allowances are, but just it's important to be aware and make sure that you're not exceeding any limits, but also putting in what you can. And if there's any questions on that, there's great articles about it online, or an advisor can help, and an accountant actually will be able to help with that as well. So what about protecting yourself then? Employee benefits will have likely been covered when you're employed, as the name suggests, but probably won't be now. So there's a lot of things that you can use to protect yourself that, in my opinion, almost become more important when you go to a consultancy or freelance role. So life insurance is the probably one of the most common ones and the most one of the easiest to understand. Essentially pays out a lump sum, so a cash balance basically when you pass away. Reason that life insurance is important is not as much for yourself because you won't be here, as the name suggests, but for your family. So if you're the main breadwinner and you've got a family at home, there's a mortgage to pay, and something were to happen to you and your income were to stop, what are your family going to do? And that's where life insurance comes in. So if you've got life insurance of, say, £500,000 and that can pay off the mortgage is just an example of what it can be used for. That will leave your family in a much better position, not without having that financial stress on top of the fact that you're no longer with them. If it doesn't need to be paid for the mortgage, so if there isn't a mortgage in place or any debts that need to be paid off, it can just make the situation much more comfortable for your family, knowing that financial stress is not something that they need to worry about. So that's life insurance. Income protection and critical illness. So they both pay out if you aren't able to work due to sickness, but they are slightly different in how they're set up and how they're paid. So income protection pays a regular income if you're not able to work. So that will only pay 60% of your income. The reasoning behind that is that they want to incentivize people to go back to work instead of relying on things like income protection, but pays a regular income to essentially meet any financial obligations. Critical illness is slightly different, so that pays out a one-off lump sum. So as with the life insurance, if you're to be diagnosed with critical illness. That's a list of normally between 30 and 50 conditions. So it tends to be things like heart attack, stroke, but on a predefined list. So income protection would cover things like depression that wouldn't necessarily be covered under critical illness, whereas critical illness would cover, I'd say, the more common conditions that put people out of work, but it's a lump sum as opposed to regular. So they don't tend to continue once you leave employment. So a lot of those are provided with the employment, but once you leave, they don't continue. It's possible to set them up privately, and not too arduous to set up. So you can either go through an advisor and they can help you to set that up, or you can look online and do it yourself. If you do it online, of course, it's important to make sure you read everything in full and that you're getting the cover that you need to get. But they will likely be paid as a premium, so a monthly amount that you'll pay each month to set up that cover. So that really circles back to what we were saying about factoring that into your expenditure. It's not likely to have been in an expenditure that you would have had to consider before, although a lot of people have life insurance for mortgages, but other than that, people don't tend to set it up as they would when they're employed. So it's important to factor that in if that's something that you'd like to set up, and we would definitely recommend having that in place if there's a need for it. So we always say to clients, and it's not the most cheery conversation, but if the worst were to happen to you and you were to pass away or no longer be able to work, what would that mean not only for you, but for your family? And if the answer is, I'm not sure, and I think they would struggle, then there's products that can be put in place to help you with that. Wills and power of attorney then. So this is the point I'd like to finish on. So not a direct area of financial planning in terms of the work that I do, but a conversation that we have with clients every single time. Wills are really important to put in place. So you could have the best financial plan in the whole world, but if it's not going to where you'd like it to when you pass away, then it might not become the best plan. So if your will isn't up to date and your finances aren't being distributed as you would like to, then it's not, it hasn't achieved what you'd like it to achieve. It's also important if you have children in terms of naming guardians. And again, that comes back to the point about insurance. What would happen if you were no longer here? So that's really important to have an up-to-date will in place. And power of attorney. So people often think about power of attorney when it comes to people who are elderly, but powers of attorney are really important if you lose mental capacity. So it basically means that you can nominate someone to look after your assets and your affairs if you lose mental capacity, or if you wouldn't like to look after them yourself in some areas. So if you're going abroad for a period of time, or if you do become elderly and you don't want to manage it yourself. As I said, people do tend to think about them when it comes to people who are elderly, but it's a really good bit of planning to have in place when you're younger. We don't know what's around the corner, and even things like bank accounts. So we've seen couples who can't look after respective finances when something happens unexpectedly. So a really good box to tick when it comes to setting the foundations for financial planning. So maybe I should put that at the start. Maybe I'll add that into the start of the presentation for the next one, but a good point to end on nonetheless. How do you set them up? So you can do them online yourself. Caveat to that, well, there's probably actually a lot of people in the legal profession on the call who would do well setting those up themselves. But if you're not sure and you do it incorrectly, it's sometimes not worth the paper it's written on. So if in doubt, go and speak to a solicitor who will be able to help you set those up. And that's not something that I cover. So what do you need to consider? In my opinion, it's all about having a plan. So moving to a freelance or a consultancy based role can give you huge financial freedom and great earning potential. But it does come with its considerations when it comes to financial planning, because when you're employed, a lot of it is done for you. So considering what your current financial situation is, what that looks like in terms of earnings and what you need to meet your financial obligations is important. Also then factoring in benefits that aren't considered, so pension planning and insurance being the main ones, but there's lots more that we could cover, and making sure that you're set up not only now but for the future. That will then give you financial peace of mind that you can survive and you can focus on the day job without having to worry about your finance and what is going on in the background. So I will leave it there, as I appreciate it's a lot of information in one go, but happy to take any questions if there are any.
Thank you, Molly. That is great. A really good overview. And obviously, as you said, we can only touch on the generalities, and because everybody's circumstances are so individual, I would really reiterate the aspect of at least a 6-month buffer fund. It also gives you an opportunity, if you're going from an employed role into freelance, to sort of mentally prepare, because, you know, one thing you can't guarantee is when exactly you get the first role. So it allows you to not have peace of mind.
Yeah. And the freedom to be able to take the role that is right for you, which is really important. So not being governed by actually financially rushing to come into a role. It gives you the flexibility, in my opinion, to pick what's right for you.
Great. And Rosalind says, brilliant, thank you. And she's asking whether you offer one-to-one consultancy. Can she get in touch directly? Do you want to pop your email in the chat? And just in case other people are thinking of more questions, what are you seeing in the marketplace, Molly, in terms of people coming to you? What are their top sort of questions?
Currently, if you ask me today, is around inflation. Saving and budgeting with the cost of living going up. I always direct people to Google around cost of living and where to save money, because it's not my area of expertise, but there are some great resources out there of how to help in that area.
Yes, you mentioned Martin Lewis, his money supermarket, because I know you can sign up for alerts, can't you? And he gives you a weekly pick of his top thoughts on that.
But also just Googling where can I get the best interest rate at the moment, those kinds of questions. There's some really good resources out there for helping with that. And pensions is one of the most common ones as well. So what's happening to my old pensions? Can I review them? So that tends to be a common concern for clients. I'd say they're probably the top 3 at the moment.
That's a staggering sum, the 14 odd billion. Staggering. So everyone ought to go and look under in their back.
And just to see whether it worked previously, because most employers now, as of recently, will have an auto enrollment scheme. So you will likely have had a pension where you've been. So starting with old employers is a good place to start.
Yeah. Are you about the types of lawyers going into freelance work in terms of their age group or experience rather? Do you have any thoughts on that?
I think that is, from the surveys that I've done, is mainly due to client bank. So being confident in, if you're, for example, in an area like family, being confident in your client bank and knowing that you're going to be able to self-generate the work is quite key, I think. But then it depends, because if people want flexibility, I've seen a lot of people, for example, being called back to the office. They don't want to go back to the office. They want a hybrid working structure. So that's bringing people at the start of their careers. But I'd say on the whole, there's a higher percentage of people who are more established in their careers who are moving to a freelance or consultancy based model. Maybe just because of confidence as well. So
and also they've probably had a taste of what it's like working employed once they've got their sector experience. I mean, and I should say that Obelisk, unlike some, but obviously not all, some legal services providers, we don't expect people to bring clients with them. If you do and you want to run through us, that's great. But we find work for you. So I'm just double checking, there are no more questions at the moment. So I do hope this has been helpful, because, you know, we, as well as Molly at Obelisk, we know that understanding and planning your expenses and the financial commitments are all part of making your change a success in the freelance world. So thank you so much, Molly, for your guidance today. I think you've put your details in the chat, have you?
Yes, I have, but also LinkedIn, if people want to get in touch, is a good place.
Brilliant, good point. And you can certainly find out more about working as an in-house consultant from case studies from the client's perspective and consultants on our website, and recordings of our previous episodes of the Move the Needle series can be found on our Obelisk Support YouTube channel. So thank you so much for joining us today, and we look forward to seeing you again and hearing from you. Bye-bye.